All right. Good morning, everyone. We're just going to get started on our Barley Insights February webinar. So first up, we will have Brian Comeault, I might have said that wrong, the Chief Analyst and Risk Management Specialist from Ireland, Comeault and Lafoy. So if you just want to share your screen, Brian.
Sure. It is a tough name to get. It's Como. We're
Oh, Como.
I'm a
Okay.
Frenchman, or I'm a Frenchman that doesn't speak French. Maybe that's the right way
Okay,
to
there
put
we
it.
go.
Um, yeah, are you guys able to see my presentation or
Not
not
yet.
yet?
Not yet.
Okay.
Not yet.
Okay, here we go. There's one more button I had to press here. Okay, is that
There we
working?
go. Yep.
Okay. Yeah, I just thought I would. Thanks for having me on, first of all, and uh, it's really great to get to connect to people. I thought I'd do a quick introduction of who we are. We've only been in business for a little under a year now. In fact, the beginning of March will be our first year anniversary. We have three partners in our business, and we do market consulting, both in a direct one-on-one farmer situation, as well as we produce reports and content and analysis for anybody who's willing to pay for it, essentially. And we have three members of our team. We're all ex-Cargill people who were in some way affected by recent you know whatever you want to call it, shifts or transitions or restructuring and all that kind of stuff. So we decided to go at it on our own. Some of you may recognize Sarah here did a term with CANTERRA in between her time with Cargill and her time with us. So yeah, we stole her from CANTERRA, and we hope that's okay in the long run here. So yeah, I understand that today is supposed to be a focus on barley, but I did put some barley stuff together, as well as canola, because I think canola is a really fun market to watch, and it's doing some stuff that is interesting. So I thought I would just focus on those two, and then if there's any time, I could probably take a few questions and things like that if that works. I thought I'd start with barley production. I think this is relatively old news as far as the production number. There was 9.7 million tons of production this year in Canada, which is large-ish, I guess you could say. And the interesting thing is that this is not because of acres this year. It is because acres are actually only 1.1 or 1.2 million acres. This year it was all about yield, which I think will become an important discussion in the next few months as we start to talk about new crop acres. I don't think we can assume a yield like this again. Last year it was, or this last crop year, it was 79.4 bushels per acre. This is Statistics Canada's numbers, by the way. Average yields are around 66 and a half bushels per acre across the country. And that's if you leave out kind of some of these, let me get my laser pointer here, some of these, you know, anomalies here as far as 2021 drought year and then this year's, exceptional yield. So, the average of the mean is probably somewhere around 66 and a half. So I think most people won't be, necessarily estimating anything higher than that at this point in time, or maybe some small adjustments above. But I think the story here is that we're probably going to return more towards the average next year unless something happens. So a lot of talk about yield in the last little bit. We recently did see Statistics Canada's grain stocks report for the end of December. That's released in February here. This particular chart is the on-farm stocks in Canada. They did show that barley stocks on farm were above that of the last 5 years, and that's putting some weight on the markets for sure. But this is understandable given that the production was large, but still isn't wildly outside of normal. Um, Exports into the end of December for barley have actually been really strong, ramping up from the last couple of years. Feed use has also been higher, which is a result of the lower prices. So I probably don't have to tell you folks that low prices incentivize demand, and that's a good thing. And you can kind of see here these blue bars are the feed numbers into the end of December, and the red bars are the exports into the end of December. So you can kind of see that over the last 3 years, we've been growing those slowly in both categories, which is kind of helping to offset some of the production that we're seeing. Interestingly, though, and this is just in the last couple of weeks, since the end of the calendar year, we've actually seen more aggressive export pace in barley, particularly in the last two reporting weeks. So 2 weeks ago, we saw 207,000 tons of barley exported. This week, we're seeing 167,000 tons. So as you can see, this is wildly outside of seasonal norms. The 5-year average and last year was kind of tracking right around 50 to 60,000 tons at this time of year. So this is really great to see. It's relatively outside of normal, and again, I think that's a culmination of things as far as just overall demand, but also the lower prices were incentivizing that to happen as well. Here's what those two large export weeks look like from a cumulative perspective. So, we are kind of tracking way above average now, which was this lower line, and we're, definitely leaping above, or sorry, the average is the green line, and we're significantly above last year, and even tracking well above average now. And I think this will really help to shrink the balance sheet in the next little while, because we need to kind of take off some projected ending stocks in order to help this market to find some support or to find a bottom here as well. Let's talk about where those exports are going. We have actually seen a big jump in malt exports to some destinations. China has taken over 500,000 tons of malt in the first 5 months of our crop year. Japan has more than doubled their malt purchases. And it looks like Colombia wants a taste of our Canadian beer as well by buying malt this year as well. Our feed exports to China, as you can see, have fallen quite considerably this year. But it also has been more than offset by feed from Saudi Arabia. So, there's still some rebalancing happening here, particularly with our relationship with China, but we are finding other avenues and for our product, which is good. Lots of trade meetings are happening in places like Mexico, and even in China. I know of some folks who have been recently making trips to both of those destinations to try to smooth out some of the trade relationships that we have, so that we can diversify away from the United States. Although the U.S. in our barley market isn't a huge player, but they still are, relatively consistent in the amounts that they do take. Taking a look at corn exports, or corn imports, sorry, that's always a big topic when you get into particularly big corn production years in the U.S., as well as what it does to the barley supply and demand here in Canada. Of course, there was a big crop of corn in the U.S. This year. The USDA recently increased their production, which was actually by a significant more than expected when the last report, or the January fundamental report the USDA releases, dropped. And they still issued a prediction of over 2 billion bushels of ending stocks in the U.S. of corn. That's pretty big. That's it's kind of getting towards normal, but it was once seen as a pretty burdensome carryout. Corn exports, though, on the other hand, have also been making some headlines this year, as they've been relatively robust. Canada has been the recipient of more corn than usual, so one might think that this is offsetting barley demand here in Canada, but I wouldn't say that that's necessarily the whole story. So in 2021, that was a production year challenge for us here in Canada, and as a result, we took in large amounts of corn from states like Minnesota, Nebraska, South Dakota, and even some into Western Canada from Washington State. Iowa is one of those states that sends us a lot as well, but it is usually too far to pull into Western Canada. A lot of that goes north into Ontario to satisfy the ethanol. But look at the contrast this year. The only state that is higher this year is Michigan. we actually haven't seen a lot of imports year over year, or this is comparing 2021 and 2025. So we haven't actually seen that many uh, more imports this year than we did in 2021. So as you can see here, we imported a significant amount from Minnesota in 2021, some large amounts from Iowa and Nebraska, South Dakota, Washington, all those states that we would expect to see come in to Western Canada to kind of offset some of our feed usage. But this year, the only state we've really seen major increases in Michigan, which we don't buy corn from Michigan for feed. It is generally goes north to our neighbors in Ontario for ethanol use. So we're not really seeing that pull of corn from the U.S. To offset our barley demand here either. We've recently seen a kind of a push higher in barley feed prices. As you can expect, they kind of bottomed during harvest here. This is a Saskatchewan's cash reported price, by the way. And this bottom just south of $4.50. It's kind of been climbing and leveled off as we got through the month of December, and recently, as those exports ramped up, we saw an increase in price. But that's leveled off a little bit now as well. But again, the incentive or the cure for low prices is low prices, right? So we are seeing some demand come in because of the low price, and we're seeing some benefit of that. I can't say that this is going to be a runaway situation where we're just going to see the prices of barley rise into perpetuity from here, but I think now that we're off kind of the basement floor, it is giving some farmers a bit of an opportunity to make some additional sales and get some additional value out of the market here. I also, pricing is also important again as we kind of move towards new crop, because we probably need to buy some barley acres this year, and the market probably needs to respond in order to incentivize some additional planting of barley. I'm not sure exactly what kind of shift we're going to see this year. It has been really interesting based on prices and cost of production, and we haven't fully done that analysis yet. But there are some crops that stand above the rest. Canola is one of them. We're going to talk about that in a second. But these smaller crops like barley, increases because they're smaller. You can see, larger percentage swings in these crops compared to, say, the bigger crops like canola or wheat. So it could be interesting to see what happens this year. I think the pricing does probably need to continue to buy acres for next year, and I think this recent little rally is probably helping to do that. Barley ending stocks this year are expected to be above 1.5 million tons. I think that these estimates were done by myself. As we kind of got into the end of December and into the end of January, it's interesting to see what's happening with this export market, because that could actually trim some ending stocks off of our estimates here, which would be a positive. Of course, it's always hard to make prices go down when the stocks are thinning out a little bit. So overall, we're a little bit more positive than we were, say, at the beginning of September, when the yields looked big, the crop looked big, and there was a lot of concern about trade, not only from China but from the U.S. and from a number of different areas. So I guess we're cautiously optimistic, and we are happy to see what's been happening in the pricing market and even in the fundamental market as well. I thought I'd open it up to questions about barley before I do have some slides on canola as well, which I think is a hot and interesting topic at this point as well. So I could open it up to questions. Okay. If there are none, I know I speak really fast, and I apologize for that. I make videos every day, and I feel like I just motor through them really fast. And sometimes I wonder if it's easy to follow. So if it isn't, just raise your hand or ask a question. I'm open to that as well. Um, Canola, big story happening on a number of different fronts here. Kind of in some ways it's opposite, but here's the crush pace for this year from the Canadian Oilseeds Processing Association. According to their last report, we've crushed over 6.3 million tons of canola this year, which is by far a record amount of canola crushed. Are in the implied, or maybe I'm getting ahead of myself here. The last week that we saw crush was 255, call it 255,800 tons of canola crushed just in the last reporting week. That is second. That's the second largest on record, second only to the week of November 28th when 258,600 tons were crushed. What's what this is implying, and there's also a number that they produce called crush capacity utilization, which is a percentage of the total capacity that is getting crushed at any given time. Of course, this number is never 100%. You can never really get to 100% of capacity. This last week was 93.7% of capacity. That record week that we talked about previously was 90, it was, yeah, 93.3. So they do adjust it a little bit based on, shutdowns or maintenance and things like that. So in some ways, as far as crush capacity utilization, this is the largest crush capacity utilization, with the second largest amount of crush that we've seen in that record amount. What's interesting about crush capacity utilization too is you can kind of back off what the total capacity is. Right now, the implied crush capacity is about 14.1 million tons. That's without the new Regina Cargill crush plant coming online. We haven't seen that yet. We may have seen some deliveries showing up into that facility, but no crush is happening yet at that facility. That could open up the crush capacity to about 15 million tons overall. So if we continue to run at these levels or these percentages, once that crush plant opens up, that would offer some really good opportunity to increase our total crush number for the year. One of the good things is canola board crush margin. So this is essentially the margins calculated between the canola seed futures, the soybean oil futures, and the meal futures, and kind of calculating what they call board crush, which is an indication. It's not a profit and loss necessarily for a crush plant. It's just an indication of where the direction that margins are going. And recently, through the month of February, we hit new record highs in crush margin, in board crush margin. It was hovering right around this $200 level, or between 180 and 200. Even historically, those crush margins are really, really good. It was incentivizing a lot. That's why we're seeing such high capacity utilization. The more they can crush, the overhead costs in those crush plants stay relatively static. So the more they can crush, the better the better chance they have at profiting from it. And now those crush margins have just increased substantially over the last 2 or 3 weeks. So this is this doesn't necessarily incentivize demand right now, but what happens is they hedge these crush margins, and then that crush margin is used for further out. So it might be July, it might be crush margins through September or even into October if they can hedge this kind of margin, using new crop values and things like that. So overall, this is a very positive development in the canola market, because obviously if margins are thick and they're good, it incentivizes more demand and ultimately helps the farm gate prices as well. We did see, again, the CGC issues statistics weekly, and one of the statistics that they report is the stocks, not only at process facilities like crush plants, but also at export facilities, country elevators, export facilities, and process facilities. In this case, I'm focusing on the process facilities or the crush plants. we did see a large growth of the stocks that they were holding there into the first 4 to 6 weeks of the year. Um, at one point, we did hear some anecdotal information that there was some crush plants that were so full they were turning trucks away. That looked like a bearish input into the market, and maybe it was there for a split second. But what we're seeing now is that the buildup was less about producer push and more about demand pull. And so this last week of crush numbers kind of confirms that the stocks that were being built up in these process facilities was intentional in order to continue the crush at the pace that at the fastest pace as possible. We currently have our crush number at 12.2 for the year. If we continue in this fashion, we may have to adjust that higher. That would be good. I think the rise in value that we've seen, or the rise in prices that we've seen recently, has priced some of that in already. But we're seeing really good crush numbers. We're seeing significant price increases, and overall, those two things are not mutually exclusive. I'll get into maybe one of the elephants in the room here as far as exports go, and one of the things that really hurt our industry this year. Of course, big yields were part of it as well, but when you combine big yields and trade issues with our largest canola trading partner, that always can change the dynamic a little bit here. Here is CGC, cumulative canola exports. The green line here is the 5-year average. This blue line here is last year's performance. Last year was a record performance for canola exports, and originally we had hoped that would continue this year. But as you can see, we've been significantly lagging behind both last year and the 5-year average. This has been the kind of the biggest weight on our canola market at this point, because that's a huge market. Exports used to take up about 60% of the demand that we had. Crush has now taken that spot over, but it was still closer to 50 50, 55 45, even in the years where we had good exports. So this now knocking down the exports, I guess, to be clear, we have no way of really making this back up in total from today to 2024, even though we've now kind of solved the China problem to some degree. Just logistically, moving this much canola through to the end of the year is to match next year is not going to be possible. So we know that's not going to happen, but we are seeing some green shoots, if you will, in the export market. We have been seeing some increases year over year in places like Europe, which is offsetting a little bit of Australian demand. We've seen some significant increases, at least significant in year over year performance into Bangladesh. Interestingly, sometimes Bangladesh, some other countries too, I'll talk about the UAE, sometimes they re-export our canola. So sometimes this canola ends up in China anyway. It just does so under a Bangladeshi flag, and therefore, they kind of avoid the tariffs. Again, we've been increasing our amount to France slowly, or a little bit increasing to Japan. Japan, though, is a bit of a static buyer. They buy a similar amount of canola every year. Mexico, we've increased our amount as well. We've also started sending some stuff to Pakistan. UAE is a popular one that we send to as well, and they often re-export as well. But into the end of December, these are all year over year into the end of December, just to kind of show the differences from the first 5 months of the year. So we have not been offsetting the total amount of exports that we have lost from China, but we are incrementally adding to exports in other areas. We will be able to sell more to China. We've already sold about 600,000 tons to China for movement in March. So none of those numbers, of course, are reflected in here yet either. But again, it will still be a bit of a weight on the market. We won't be able to make up for that much. But if I do go back a couple of slides here, we probably could get back up to the average level, which, from the beginning of the year or from September to October, when it was looking pretty dire on the export market, that would be a significant improvement. So that's some good news as well. Um, as we were kind of logging into this presentation today, what was interesting is we saw some developments here in the futures market. We've seen, we have now about 4 days of continuous gains in the canola market. March reached above or just below $680 a ton this morning. We've even seen an official $700 now touch on the July contract, which I'll get into in a second. Not all of this is necessarily related to canola, of course. So we have seen some benefits to crush. We've seen a little bit of extra exports, but the main driver here right now is definitely the why isn't my slide advancing now? Is definitely the soybean oil market. So here's the soybean oil market since the beginning of January here has absolutely taken off. There has been a lot of I guess speculation isn't the right word. I think more meat put on the bone as far as the EPA standards and the renewable fuel standards that are going to be implemented in the US and how the 45Z credits affect that. And so there was a lot of unknowns prior to the beginning of the calendar year, and those are now becoming more known. And it does look like the U.S. or the U.S. policy is going to continue to support vegetable oils to be used as fuel, and they're going to get the credits, the 45Z credits, in order to incentivize that as well. There was some big expansion that was announced, 6 months ago or so about the future of particularly aviation fuel and biofuel. Or biodiesel, I should say, which vegetable oils is a big part of biodiesel because, of course, biofuel also encompasses ethanol and things like that. But biodiesel is largely, it affects oil seeds and vegetable oils more than the ethanol does, of course. So we've seen really good expansion in the soybean oil market, and that is likely the main driver. You can kind of see here the correlation between soybean oil, and if I go back to the canola oil, we started those rallies right at the same time. These are very highly correlated markets, and canola is not in the driver's seat right now. It is the soybean oil market. So that's kind of something that we need to watch out for, because if the soybean oil market decides doesn't want to see gains like this anymore, we could see risk in our canola market as well. Just pulling up July here because July is the one that touched 700 today. As you can see, the snapshot that I took just before we got on this call was trading just over $700 at 770. We've been advocating to our clients that they hedge some $700, and particularly as we get into next year. What's interesting too is this is the canola yield curve, which kind of shows the futures prices on a graph here. You can see the May over $700. It drops off into November, which is kind of a normal thing. But what's interesting is we actually get back to those July levels already for January. So again, we have been advocating for our clients to be hedging some of that January at this point, particularly if they don't need the bin space cash flow or movement into the early parts of harvest. That's a really good area to start 2026, I guess, crop year. We'll be in 2026 crop year marketing at $700. If that's the worst decision you make on canola this year, then you're probably going to be doing pretty good. How am I doing for time, Carissa? Am I still doing well?
Yep, you are 10 minutes over. So if we could
Oh my gosh. Okay.
shortly, that would be great. Thanks.
Okay. Well, I'll put in a plug here for our stuff. We do have our reports that we offer for $99 a month. You get morning commentaries every day. We do a weekly in-depth, fundamental or technical report at the end of the week, and then we also send what we call hot takes if anything comes out in the in the middle of the week that we need to talk about or maybe actionable. We also have a YouTube channel that is free to anybody, and I've included some QR codes here as well. I can send the presentation back to Carissa and Krista if they want. But our YouTube channel is Canadian Ag Markets. You can follow us for free, and again, if you want, you can also subscribe to our reports, which we think are the best in Western Canada at this point. So that's all I had, Carissa. So thank you very much.
Thanks. There is one question in the chat here, and it says, when do you expect the Cargill Regina to be crushing?
I would say that my uh, optimistic assessment would be May. I've heard anecdotally that they are taking some canola in, which likely means that they're, testing the equipment and stuff like that. So I'm optimistic, or my optimistic assessment would be May, but it was also supposed to be more than 18 months ago that they opened this facility, and they've continued to push it off. So, it's a difficult one to say. I feel like for sure by harvest of 2026, it'll be if it isn't running harvest of 2026 at full capacity, I'd be concerned.
Awesome. Thanks, Brian.
Okay, perfect. Thank you very much.
Thank you. Sorry for running over.
That's okay.
Yeah.
We will now move to Dieter Schwarz on legume technology, so inoculants for cereals. Oh, you're muted still. Oh, sorry. Yeah, there we
No,
go.
I'm all good. Can you all see that?
Yeah.
Excellent. Well, thank you all for joining us this morning. My name is Dieter Schwarz. I'm with Legume Technology, and I'm just going to spend a few minutes here this morning to share a little bit about the company. And as we are keeping it somewhat cereal and barley specific, I'm going to share with you a little bit about what we're working on in cereals. Of course, as Brian just mentioned, there are some exciting times happening in the legume market, specifically soybeans. As you can tell by the name of our company, we do work in that area of crop production with rhizobium products. But this morning, I'm going to focus on some of the other parts of our portfolio. So we'll maybe jump right in if I can get this to advance. Here we go. Sorry, it just took a minute. So Legume Technology was founded in the year 2000. So we've been around about 26 years. It is headquartered in Nottinghamshire in the United Kingdom, which for those of you that are familiar with your movies and history is where Robin Hood is from. So kind of an interesting part of the world. We are part of a larger group called the Green Universe Agri Group, which are headquartered in Spain. And we have a lot of expertise as a result to offer to the agricultural communities. Um, and we are small enough that we can work with you to create and bring products specifically to the growing region's needs. So, just as an example, this year we're adding a third strain to our soybean inoculant to create uh, better efficacy and longer nodulation, season-long nodulation in soybean crops, which should help us with yield and quality. Our core markets, as you can tell, North America, we're focused on Canada, but as a European company, of course, we service all of Europe, including some of Eastern Europe, and also into Africa. And our work in Africa also allows us to bring some very interesting species of bacteria back into some of those other core markets. So it's kind of a symbiotic relationship. We market our product there, and we find some interesting um, products to bring back home to other markets. So It works quite well for us. One of our main technical values is the acenic production, and that essentially means free from living organisms other than the species required. So very, very clean and very sterile environment that then allows us to only have the bacteria and rhizobia that we are trying to bring to market in our product. So no contamination with other things. So specifically as it relates to biostimulants, which is what I'll be focusing on today. So our intention is to increase nutrient use efficiency, increase tolerance to abiotic stresses, increase quality traits, which for those of you that are seed producers in the audience is quite important, but also to increase nutrient availability. And we do that with plant and yeast extracts, seaweed extracts, rhizobia, of course, that I already mentioned, but also mycorrhizal fungi, which may be new for some people in the audience, and I'll get into that a little bit. So overall, our product portfolio is as is presented in the slide. As I already mentioned, we work with all legumes from alfalfa to soybeans to peas, lentils, chickpeas, etc. We do have solid peat products as well as liquid products for most of those crops. We do have liquid products for peas and lentils. I know that's a question that comes up a fair bit. But as it relates specifically to cereals, the products I want to focus on today are a product called Root Fix and a product that's called MycoFix. Once again, Root Fix is a liquid treatment and MycoFix would be a solid product. So specifically, when we talk about, the impacts this has on plants, rhizobia, we already know what we're trying to do there. Bacillus, which is our Root Fix product, we want to promote plant growth, abiotic resistance, and biotic resistance. We want the Bacillus product to act as a plant growth promoter and give us increased response to biotic challenges. We want that as broad spectrum activity. It is not a fungicide, but it is a robust inoculant. So as the title of the presentation implies, we are inoculating cereals. As it relates to mycorrhizae, that is a really interesting and somewhat complex product. For those of you that are familiar with mycorrhizae in the soil, it's essentially a spider web in the soil of communication. So it acts as a knowledge transfer web in the soil. It helps, it has fungicidal properties, but one of the challenges and limitations are when we till the soil and when we add crops that do not support mycorrhizal growth, such as brassicas, as most of you on this call will be familiar with. So that's some of the challenges with mycorrhizae, but we have seen some interesting results that I will share with you. So once again, specifically speaking about Root Fix, which is a product that we have seen some very interesting results with cereals on. It is bacteria, and the 3 strains are listed on the slide. So Subtilis, halotolerans, and atrophases. And those help with nitrogen fixation and phosphate solubilization. So things that a lot of people on the call, we always talk about trying to solubilize the phosphate that's tied up in the soil. And one of the reasons that we're seeing interesting results with this product is because we can solubilize some of that tied up phosphate and give us that improved nutrient acquisition. So here are some trial results. Now I'm going to focus on the bottom half of this slide, but in this slide, one of the interesting things with Root Fix is it seems to react differently with different crops, and we're seeing amazing results on peas, over 24 trials, 20+% yield response, which is phenomenal. Now, where we're a little more muted and a little more, or we see a little less response, to be very honest, is in our cereals, but we are seeing good results nonetheless. So specifically today, we're talking about barley. We have seen up to 8% response. So I think that's worth talking about. Where we've seen really great response are on our winter cereal crops. So winter wheat, 14%. That's definitely not nothing. and that's definitely something we're talking about. So that is something that we're very interested in, but we're also interested in working with you guys if you're interested on your spring crops. Barley and wheat, we're seeing 8%. A little less in corn. That warrants looking into it a little further, but nonetheless, we're working on that. And interestingly enough, we have worked with CANTERRA this past year on canola. We're going to continue to work on that some more, and we're seeing interesting results in that as well. One of the things we're working on in the greenhouse is rice. So I know none of you guys grow rice, but just bringing it up for kind of a visual representation of what it looks like in cereals. Definitely, we see an increase in stand establishment in rice that was up to 50+%, which is definitely interesting to talk about. And we're also seeing increased phosphate solubilization, which is definitely something to talk about, as we're expecting similar results in wheat and barley, and warrants further work. And once again, if anyone's interested, please contact me. We'd love to work with you on trials with this product in Western Canada. And interesting results in drought tolerance. So here in the greenhouse, they shut water off for 4 days and then turned it back on. And as you can tell, root fix certainly seemed to help with some drought tolerance. This is not a word that we want to use in Western Canada, but those of us that have been around for a long time know it happens. So improved drought tolerance is definitely something that we're looking towards. And possibly some of the reasons that we haven't seen a lot of difference in yield is, and I know, this is area specific, but in some areas we just didn't see the aggressive droughts that we've had, and we have done a better job managing our moisture with different practices, agricultural practices, than in the past. So we've done a better job with minimum till and moisture conservation. So thankfully, we have not seen the droughts that I'm familiar with from the 80s still, and some of you on the call are as well. The other really interesting thing with this product that we're seeing, and this is now wheat, once again, a product that you're familiar with in Western Canada, are with leaf diseases and cereal diseases. So here specifically, we're talking about yellow rust, and there's 9 varieties shown. Some varieties are the improved varieties that show some resistance to yellow rust, but there are some susceptible varieties in here. And in every single case, with root fix being applied, we're seeing increased, I don't want to use the word resistance, but increased ability of the plant to withstand the yellow rust challenges. So that is some really exciting work that we're seeing. Once again, we're wanting to do some of this work in Western Canada as well. We're seeing some efficacy as it relates to fusarium as well, and we're definitely doing some more research on that. I'm certainly not here to tell you that root fix is your solution to all of that, but we are seeing some interesting things, and it warrants further work, which we are doing in Western Canada. So really today, as I mentioned, is just to have a conversation to maybe get your interest in this product and maybe have a further conversation of how this may work in your farm. So, as I already mentioned, the root fix was able to lower the impact of yellow rust on these susceptible varieties. Now, the other product that I want to touch on real briefly, we are not yet, so just to be clear, we're not yet registered in Canada with this product. We are going to be doing trials this year. We have seen some really interesting results when we combine this product with our other products. Down the road in our product development, we are going to be coming out with products that are going to be easier to apply, that'll combine a number of products such as a root fix and mycofix, or a liquifix, so soybean inoculant, with mycorrhizae, because we're seeing some really interesting synergistic effects when we combine these two products. Some of the key advantages, as you're seeing on the right-hand side of your slide, we are increasing the mycorrhizae in the soil, which then gives us increased root mass and surface area. That gives us an increased resistance to abiotic stress, increased nutrient acquisition. So, and the last point, which I haven't made yet, all our products, which may be of interest to some on the call, are suitable for organic farmers. We do have organic certification with all our products. We are unique in the marketplace with that, so that may be of interest to some people on the call. Once again, it's easy to work with rice apparently. So I know none of you grow rice. Hopefully, none of you will ever have to grow rice. Um, so we're seeing some interesting results in cereals and some good profit margins with this product. We're also seeing some really interesting results in corn. Once again, that may be of interest to some on the call. Once again, just wanted to point out the results in cereal specific crops, but also seeing some great interest with sunflowers. As you can see, really showing some great results there when we can increase the mycorrhizal um, population in the soil. So, and that is of special interest to you guys that are in canola rotations. We all know what canola does to the mycorrhizal population. So, um, as it relates to pipeline, I'm going to try to keep it very short here this morning. So here's some stuff that we have in the pipeline. Pelifix, which is um, a new treatment system for alfalfa and clover. So for those of you guys that are in seed production for those things, that's really interesting. It's a brand new product that is generating a lot of buzz with some of the alfalfa seed producers in Manitoba specifically. We are going to have a Legume Fix Pro, which is an alternative carrier for solid products. We are going to have a granular soybean inoculant called TerraFix that is not listed here, available this year. So we will have some of that out. I know there's been some shortages in the market of granular soybean inoculant, so we are going to have some limited availability this year, but definitely we'll have some growers being able to try it out for this year to get it into place for next year. We're working on some novel rhizobia strains in Europe that we're going to be able to bring into Western Canada. As I mentioned, this year we're already doing a triple strain soybean inoculant product here that is novel. Once again, we do have some novel bean inoculants, dry bean inoculants that we tried last year that have showed some incredible yield advantages over the current offerings in Western Canada. So we've been able to replace about 50 to 70 pounds of nitrogen fertilizer, which is currently the standard practice in Western Canada for dry bean production. And we've been able to replace that with an inoculant. So those are very interesting things and are able to bring some good profitability to our customers. Once again, we're working with the Gates project in Africa that is able to bring novel nitrogen fixing microbes for applications in cereal crops. Root Fix is just one example of that, but that is just kind of the foot in the door of where we're taking all of those products and some exciting times ahead. So hopefully I've stayed somewhat within my 10 minutes here this morning. Really appreciate all your time. I wanted to throw up some numbers. On the left-hand side of your screen is the Legume Technology website. So feel free to visit that for more information on all our products, everything we're working on, a newsletter, everything. So take a quick minute and maybe screenshot this. I'll share it with the CANTERRA team as well. And on the right-hand side of the screen is my contact number. Take that down if you want to call, message me for anything in addition or anything I've talked about. If you have any interest in any of our products, maybe you want to try some of our products even this year, please let me know. We do have some trial product available. So if you want to work with us, I would welcome that opportunity to work with you guys. So thank you so much for the CANTERRA team to give me this opportunity. It's very much appreciated. Once again, if there's any questions, I'm more than happy to entertain them now or going forward by phone or text. Thank you again. I'll leave that up for a minute if there's anything else.
For sure. Yeah, thank you very much. I don't think we have any questions. So we'll just move on to Peter Watts, who is the managing director of the Canadian Malt Barley Technical Center.
Thanks, Charlotte. I will share my screen here.
Perfect.
Can you see that okay?
Yeah, perfect.
Okay. Well, thanks very much, Charlotte and CANTERRA Seeds and Carissa for inviting me to offer a few comments on the quality of the 2025 malting barley crop. The short story is we had a good crop in 2025. We had a big barley crop, and with good harvest conditions and good growing conditions, we ended up with very good quality this year. So I'm going to just give a quick high overview of what's going on in malt barley quality. Just to start out, as about a little bit about the CMBTC. As Charlotte mentioned, I'm Peter Watts, Managing Director. We're based in Winnipeg. The CMBTC was established in 2000 as a National Barley Industry Association that provides marketing and technical support services to the Canadian barley value chain. So we have a pilot malt plant and pilot brewery and lab services. In Winnipeg, there's a picture of Dr. Yushu Lee, employee number 1 at the CMBTC, standing in front of our pilot malt plant in our malting facility in Winnipeg. CMBTC has 28 members. That's where our funding comes from, as well as we get funding support through Agriculture and Agri-Food Canada's agri-marketing program. That's our brewery. If any of you have been to Winnipeg before, you may have seen the brewery and the malt plant and tested the fruits of our labor. So that's sort of a traditional brew house where we do our brewing trials with new Canadian malting barley varieties. And we have laboratory services, picture of a couple of staff, Aaron and Sherwin, standing in front of some of the equipment so we can do full barley quality and malt analysis at the CMBTC for our members and our customers. Okay, so let's just talk quickly about the 2025 malt barley quality. As I mentioned, we had a very good growing season and good harvest weather cooperated. So we ended up with good quality barley this year. So just to start off, this graph is showing you the percent of seeded area to malting barley varieties versus feed in Western Canada and food. So the graph is showing you in the blue bars on the bottom, the percent of seeded area to malting barley in Western Canada of total barley area. So about 48% of seeded area went into malt barley varieties a little less than that. Let's move my thing. About 46% of seeded area went to malt barley varieties in 2025. You can see it's been declining a little bit over the years, but we're still close to 50% of total seeded area going into malt barley varieties. In terms of the major varieties that are grown for malt in Western Canada, you can see here, this is showing you over the past 5 years, the growth in AAC Synergy, now the number 1 variety at 36% of seeded area, with Copeland, the next largest and declining. Obviously, the oldest variety was registered in 1999, now down below 14% of seeded area. And our 3 newest varieties, Connect, Churchill, and Fraser, have all been seeing growth over the last few years in terms of seeded area. All right, so in terms of malt barley quality this year, I'll talk to you a little bit about some of the key quality indicators that are important to end-use customers, including malting companies and brewers. So in terms of protein content, you can see here over the past 10 years, the 2025 malting barley protein content was definitely lower than 2024. There's 2 lines here. One is showing you the harvest samples that the Canadian Grain Commission collected. So that's before selection by the malting companies. And then the lower line is the selected malting barley. So typically, maltsters and brewers are looking for moderate protein content, somewhere between 10.5% and 12.5%. And you can see here that the harvest samples this year were around 12% compared to 13.2% last year. So a full percentage point drop on average in terms of barley protein content this year. And then the grain and malting companies that have the opportunity to choose and select their protein content, it's also come down this year, not quite as significantly, but about 0.4%, with average selected samples around 11.8%. So that's good for our customers who don't want to see protein content too high. They like the Canadian barley for the enzymes that come with some of the protein, but they don't want it too high, as it can create problems in processing. So this next slide shows you malting barley protein content by major variety. So there is some variability within the varieties. You can see that on the left there, some of the higher protein contents in the varieties like Connect, Synergy, as we work our way over with Fraser and Churchill on the lower end of the protein content. So if an end-use customer is looking for lower protein content, then the grain or malting companies have the opportunity to look potentially at selecting a variety like Churchill, or if they're looking for higher protein content, they can look at varieties like Connect and Fraser and Synergy, pardon me. And this graph is also showing you the previous couple of years, so you can see the protein content lower this year than the last couple of years. In terms of test weight, this year definitely a significant improvement over the past couple of years. Average test weight in malting barley, selected malting barley, 68 kilograms per hectoliter. So it's well above the average in recent years. Of course, end users like to see heavy barley and good test weight. So this is a positive indicator for quality this year. So this is test weight. This is again by variety, by major variety. You can see test weight, and it's very clear that in 2025, the improvement in test weight over the past couple of years in all of the Canadian malting barley varieties. Thousand kernel weight, which can be somewhat correlated to test weight, but not entirely. Another quality indicator that maltsters and brewers are looking for, maltsters in particular, like good thousand kernel weight. It allows them to put more malt in, to process more malt by weight each time they're doing a batch. You can see a significant increase over 2024 and well above the 10-year average at 48.2 grams. So this is a really important and positive quality indicator in the 2025 malt barley crop. And again, by variety, we do see some variability within varieties in terms of thousand kernel weight. You can see on the left, the higher thousand kernel weight. So that's varieties like Connect and Fraser. And then over on the far right, you can see CDC Churchill has the lowest thousand kernel weight. So Churchill does tend to be a thinner barley variety and tends to have lower thousand kernel weight on average. That's not necessarily, it's not super low. You can see a significant improvement in all of the malt barley varieties in 2025 in terms of thousand kernel weight. Plump kernels, another very important quality indicator for end users. Plump kernels tend to be correlated to high extract levels, so high levels of fermentable sugars for brewing. That's what the maltsters and the brewers want to see. You can see in 2024, we had a real challenge. It was an unusual growing season, and plump kernels were quite low last year. So our customers have been very pleased to see the strong average plump kernels, about 96% in 2025, well above the 10-year average, and comparable to, surprisingly, 2021, which was a drought year, but had remarkably plump kernels in spite of the drought. And if we look at plump kernels by variety, again, you can just see year over year the significant improvement in plump kernels. Let's draw your attention to a variety like CDC Churchill, which I just mentioned, tends to have thinner kernels on average. And you can see in 2024, there was a bit of an issue with plump kernels in Churchill, which created some concern, but in 2025, you can see the significant improvement. And then with varieties like Fraser, Synergy, and Connect that tend to be very plump to begin with, all very positive this past year. This slide is showing you germination energy. This is showing you how much the percentage of kernels that germinate after 3 days, having 100 kernels in with 4 mLs of water. And you can see the average very strong this year, 99%. That's not unusual. We typically have good germination energy in Canadian malt barley, so that's a good indicator. And similarly by variety, not seeing any issues, very strong germination energy, upwards of 98, 99, even 100% in most of the varieties. And just a couple more slides. This one's showing you, this is a little bit more, flies a little more under the radar. We call water sensitivity. So similar to the germination test where you put 100 kernels of barley into 4 mLs of water. We also do a water sensitivity test. We put 100 kernels in 8 mLs of water. And the lower the number here, the worse off we are. So The one challenge we saw in 2025 was an increase in water sensitivity, down around 90% compared to 95%. And this just means that some kernels can essentially not germinate during the first stage of malting, which is the germination period, and if they're left underwater for too long. So maltsters have to pay attention to when there's water sensitivity to make sure they might shorten the water cycles during the germination process to make sure they get as many of those kernels germinating and modifying as possible. So a little challenge on water sensitivity this year. Again, this is by variety. No one variety is standing out in terms of water sensitivity this year, but it is something that our malting end users are keeping an eye on. And finally, just a couple of final slides here. This is called RVA test, rapid visco analysis. You can see here by province. So the RVA is an indicator of pre-harvest sprouting, typically when malt barley has been subject to moisture just prior to harvest or during harvest, at harvest time. So you can see we've got, the higher the number, the better. So in 2025, you can see that in Alberta, higher RVA values, so that's a good sign. It means that there wasn't a lot of pre-harvest sprouting. That's a better indicator for processing. In Saskatchewan, we were a little lower than last year, and in Manitoba, lower than the past 2 years. So that's an indicator that there was some rain or moisture during harvest in Manitoba that led to some pre-harvest sprouting. So it's just something to keep an eye on in terms of it's an indicator of potential challenges during malting and also storability of the crop. And finally, this is, by variety again, as I've done with the other slides. And what's interesting here is you can see that varieties like Churchill, a newer variety that has lower protein content and lower enzymes, tends to have lower pre-harvest sprouting indicator or propensity compared to a variety like CDC Fraser. You can see on the far right, those values down around 60 for RVA. So that's an indicator that there is some potential for Fraser to lose germination over time in storage. So malting companies have to pay attention to that. So and that's typical of a high enzyme variety like CDC Fraser. And then in terms of processed malt, there are a couple of indicators on processed malt. This is fine extract. So this is correlated to the plump kernels I mentioned earlier. Quite often you can see the fine extract levels. This is essentially what we can anticipate for fermentable sugars during brewing. And you can see the fine extract content here is up from 2024. And it's also interesting to note here that you can see the newer malting barley varieties like Fraser, Connect, and Churchill tend to have the highest fine extract levels. It's a very important indicator for brewers and for maltsters. Then the older varieties like Copeland and even Synergy, which is also now almost a 15-year-old variety. So definite significant improvement. You can see Metcalf there way at the bottom. So definitely a significant improvement in newer varieties, newer malting barley varieties in terms of fine extract, which is a key indicator, quality indicator for our end use customers. This is the same information just for 2025 for fine extract. And again, you can see there Fraser, Churchill, Connect, very strong on fine extract levels, up between 81 and 81.5, followed by Synergy, and then Copeland, which of course is the oldest variety. And my last slide here is on diastatic power. This is an indicator of the enzyme content in malting barley varieties, again, to help break those starches down into fermentable sugars. And as I mentioned before, a variety like CDC Fraser has very high DP, high enzyme content, which is desirable for some end users, not for all. And you can see Churchill is on the lower end of the scale with the lowest diastatic power. Macro brewers like AB InBev and Molson Coors making those lager beers with adjuncts, they want those higher enzyme varieties like Fraser and Connect, whereas craft brewers tend to prefer the lower enzyme varieties like CDC Churchill. So it's not necessarily better or worse to have high or low enzymes. It just depends on the end use customers. And similarly, you can see here for 2025, this diastatic power, quite high in varieties like Fraser and Connect, and quite low in varieties like Copeland and Churchill. So in summary, 2025 Canadian malt barley is very good quality. We have moderate protein content this year, high test weight and high plump kernels, And we had minimal disease and limited pre-harvest sprouting in the 2025 malt barley crop, which has been very positive for our export marketing program, which was alluded to earlier, which has started off quite well this year. So Charlotte, I'll finish there and turn it back to you.
Perfect. Thank you very much. Yeah, so before we wrap up, I'm just going to quickly go over just some of our varieties that we also have to offer. All right, can you guys see my slideshow?
Yep.
Okay, perfect. Yeah, so I'll just start with AAC Connect. So, strong yields. The biggest thing with this one is the MR2 Fusarium head blight. So some of the best protection in class. Yield is, right in line with Synergy, yielding well. So this is just talking about the Fusarium advantage and why like the MR matters. So in 2021, when there was some FHB, it reduced malting barley yields by 12%, but MRs like AAC Connect maintained like 8 to 10% better yields. So it just kind of shows you, your dawn threshold will be lower, less chance of a severe outbreak and then therefore a loss. AEC Prairie is one of our newest two-row malting barley. So highest, some of the highest enzyme activity, good test weight, good yield as well, suitable for adjunct brewing operations as well. So in this one, we're just working on market testing right now, and then it should be available in the next year or two as we multiply seed. So this is just kind of hidden yield advantage. So it's 1 to 2 days earlier than the check. So that kind of, the yield might not show as well, but just the data that's given in like the seed guide and stuff, it doesn't necessarily, help. So it's talking about the reducing the weather risk with it being that much earlier. So you can potentially get it off earlier, reducing your chance of having issues with what not positive weather. Okay, on to feed barley. So AAC Lariat, so two-row feed and forage barley. So, highest yielding across the board, good protein as well, good lodging resistance, withstandability. This is just kind of a complete nutrition profile. So gives you your TDN, your digestibility, and it just, compares it to Lariat. So, DM yields is very high. TDN is, a good percentage, and it just kind of shows you, the benefits of using it as that like feed and the complete nutritional profile. AB Maximizer is another two-row feed and forage barley. So, high yielding and medium maturity, and then high maximum silage quality and yield. So this just kind of compares, AB Maximizer across like some of the other forage varieties. So very high yielding. And then you can see like your NDF percent, your TDN, and those sorts of things when you're looking at, how to create your feed profile. AB Cadillac. So this is on the Alliance seed side. So it's a semi-smooth on barley and it's a 6-row. So excellent forage quality. Green yields are similar to other high yielding feed barley. High cow carrying capacity and improved lodging over AC Ranger. And then, like I said before, it's that semi-smooth on with the 6-row barley instead of the 2. AS Lafleur. So this is a 2-row barley from Alliance. So excellent lodging resistance, very short stature, and also very early is the biggest thing. So as you can see, compared to, even Cadillac, it's 4 days earlier. Lodging very similar, but then it's shorter and a really strong test weight. And that is all that I have for everyone. So these are just our contacts for each province. So we have Carissa Penner in Manitoba if you have questions. I'm the Pedigreed Seed Territory Manager for Saskatchewan. And then we have Brian Kennedy, who is the Territory Manager in Alberta.